Oh, okay. You can hear me. Okay. Right then. In that case, let's just have a quick look at the FTSE, and we'll see. We're having a few technical issues here, guys. So I'm just going to double check whether you're actually in with us or not, and then we will get on with analysing this FTSE trade. Okay, I see a couple. I think a few of you are in, but I can't tell. No, that doesn't work. Okay, let's try this. Okay, I can see that we're... Okay, cool. All right, so let's have a look. Oops. All right, gotcha, Pedro, gotcha, mate. Right then, so let's have a look at the FTSE. Now, we entered this yesterday. There's a couple of things I did with this yesterday. And there are a couple of targets that I'm interested in. Really, the first target is which is where the pivot is around this area. And yesterday I was talking about maybe hedging this to the downside, but I'm not that keen to do it. What I was really hoping for, and I don't think that's going to happen now, it's got a surge really, was the anticipation of a Draghi speech would allow this market to start moving to the upside, and then I could take it off before the Draghi speech happened. Now the Draghi speech is out in less than 5 minutes now, so for this market to pick up, it's got to do a little bit of work here. It could happen. It's got about 35 pips to make up before we hit the weekly pivot. Obviously, the most obvious area is this one here. And when we look at that in a little bit more detail, then we see that it is a horizontal level from back in the start of March as well. So that's the area that I'd really like to get. And if I could get that point, then we'll have a little bit of profit out of this. If I just get to this point, because there's slightly more on this trade than this trade, then it'll just about balance out. This one will be it'll probably actually account for a slight loss. But there was a trade to the downside, which I took, two trades to the downside actually. One over here, which this one is currently hedged, and one here, which I managed to get off around this area here. So the overall kind of structure of the trend will be positive. Now, if I can just get a boost up before Draghi starts, then I can take that trade off and not have to worry. The reason I would like to take the trade off is that when I look at this on longer term time frames, so if I go to the monthly, I suppose maybe most significantly, what I am left with is a market which could be, now not definitely, but could be.
1, 2, 1, 2.
Ah, we got you, mate. We got you.
Oh, good Lord.
You're all in.
Pain in the rectum.
Yeah, is that the Hangouts or is that just a...
Oh, who knows?
Oh, okay. Yeah, I was just analysing this FTSE, just saying that my issue with holding on actually now is that the monthly chart might just get back up to this point in the next day or so and just fail, or even get up to the weekly pivot and fail. So it's going to start looking like a signal to look for downside in April. I've got a bit of an issue with it because April tends to be a bullish month, you know, seasonalities, which I think Julian has really brought to the fore with the Actions to Wealth team. You know, you have to have it as a soft marker, and as a soft marker, it does tend to be a fairly strong month, April. So I'm going to look to see how this bar ends up, but more significantly, it has to be the bars that have completed, and look at this weekly bar. That's from last week, so that does suggest that there is some weakness in this area. And when we tighten up this line, then we start to see that we're a little way off from it, but not too much. And there's also a level here, which again we're a little way off from, but not too much. So there's a little kind of little point up here that we didn't quite reach. It's probably about another 70 or so pips to the upside. So it could be that this market goes up here and then starts to weaken, because all this does is give us a signal. That's just giving us a hint and signal that that things are the bulls could be losing momentum, and we could be running out of steam here. So things are just a little bit tentative and a little bit tenuous. So I don't want to hold on too long. But by the same token, the closer I get to this particular line between the two, the more equal the trade will be. So I'd like to get this off if I could before the end of the week, close both trades, and then potentially look for downside, even if it floats to the upside again. But then potentially be looking for downside rather than anything else. So we'll see how that goes. The market has just about frozen in this area here. It looks like there is just a little poke through there. Now, if this pops up nice and fast, then I will get it off. But Draghi is speaking, or is certainly due to speak, and that's much more likely to shape today's market than anything else. So if we can get a bit of anticipation of what he's going to say, move to the upside, then hear it, then I think we could be moving back to the downside, because there doesn't seem to be a great deal of good news. You were in the euro, Jeff, right?
Yeah, mate, I've got a couple of positions in the euro. Want to take a look?
Yeah, I would like to take a look, because I'm presuming they're both short.
They're both short, yes.
Yeah, so yeah, I wouldn't mind taking a look, because that's going to be driving what we've got with a FTSE potentially.
Yeah, look, we actually traded this long as well yesterday on 30-minute charts.
Oh, I remember, yeah.
Yeah, look, I really hope you guys did exactly as I said. And if you did exactly as I said, you would have been okay. If you didn't, you would have been not okay. And here were the instructions. We had trend line coming through here. And we traded this bar here. Okay. Actually, I think we traded this bar here. We waited for this one. That's right, on the hourly. Let me go to the hourly. Well, we could have traded either, but we did wait for this one. I remember now. So entry was here, and the strict instructions were to take profit there. Must take profit there, and move your stops to whatever profit you took here, the other side of the entry level. Take 55% off, and you win a tiny little bit of money, just enough to go to the pub with. But if you don't, you lose. And that right there, I mean, we've had two great days of, I don't know when we took the other 30-minute trade. It may have been on Monday. Euro yen, I think. Yes, might have been. Or maybe pound yen. Can't remember which one. Anyway, we saw how on the first occasion, which was Monday, we take an entry. As soon as we hit resistance, we take profit. As soon as we hit the second resistance, we take profit again. So we didn't hit the second resistance on this occasion. So that there is the key to the strategy, and why you can hit a win-loss ratio as strong as we do, because we do not trade through this area without taking profit. And on a 30-minute chart, that profit is always going to be half what we risk, and a little bit more if you want. That's what I do, just so if it does come back and hit our amended or trailing stop loss, then we are a winner rather than a break-even trade. So that's exactly how you need to trade that. When I calling 30-minute trades, must take notice of that, because these 30-minute trades are more than often, I won't say always, but more than often, they are counter momentum and counter trend. So it's shock factor. That's what we're looking for here. We're looking for shock factor. And in this occasion, we were looking to take out the stops for the shorts that were sitting here. Didn't happen. The market was too strong and took us away. Not that that's of any concern, because we also had a 4-hour order. Was it daily? I can't remember where I'm up to with this cross, to be fair, because I'm trading on separate accounts. That was our first entry. That was our second entry on the 4-hour chart. Yeah, it must have been.
Where are we at with this then? I noticed that there are some people trading this. Where are we at with this? Are we at a level of support that would interest you now, Jeff?
No, we've just been through one. This level here is the one that I've put, I guess, a marker on, because it is the bottom of my range, of course.
I mean, with Draghi speaking, would that potentially cause a false breakout there?
Oh, to be fair, mate, I don't know what's driving it. I just know technically it's set up, and that's all. And that's why I've taken it. We are at a support level. There's no question about that. But if we can get through it again, then we're down here. I think we're through the most crucial level of support. This one here, where we're currently stalling, is an intermediate. I've got no doubt about that. But the two big ones are sitting down here. So, you know, with this momentum that we've got behind us, I really can't see why we won't get down here. Draghi may upset that. That's true. I don't see that he'd be overly dovish or bearish in his statement. You know, he's almost out of there. I think he'd be probably a little bit bubbly. But that's a guess. You know, that's based on bugger all. The only thing that's really of concern here to me is the fact that we've skipped the daily pivot without testing it. I thought that might happen before this started to fall away again. So as far as I'm concerned, there's nothing to do here. I think we need space for our stops, and I think I've got that as much as I can on the first entry anyway, because my stops are at entry. On the second entry, I've got stops in probably a little more vulnerable. It's not that more vulnerable. It's okay. It's here. I don't know that I should move those and make this trade safe. This trade is still at minimal risk. We've taken only a third off the table at this point, and the second take profit's down here. So yeah, there's a tiny little bit of risk on this trade, but you know, on combination, we're winning here and winning handsomely, so there's no issue in terms of tradability. But in terms of technicals, yes, we've got to get through this level, but I don't see that as the major level. I see this as the major level. And if there is any bears about, or if there are any bears about today, I think they'll take us down to here. So that's my analysis on the euro, mate. You're thinking bounce off the bottom here, and I can see that. We've got an untested weekly pivot as well, and that could easily happen. It is going to depend a heck of a lot on what's going to happen when Draghi speaks in 55 minutes from now. So, yeah, I guess that's where we're at. It's not the only thing on. I also traded this morning euro yen again, got back into euro yen. And for those of you who may have been in that show, I've actually closed this out. Now, it was what I considered to be a no-brainer trade because, you know, every technical analyst on the planet would see that and go, ooh, tweezer top at the weekly pivot at the top of a rally. What am I going to do? You're going to have to trade that short. So you've also got to take profit. And I think we spoke about this late yesterday. Get safe in the market as quickly as you possibly can. And that's exactly what I did here. So I took profit at the bottom of the range, obviously. But we didn't hit it on the first occasion. I missed it by 0.2 of 1 pip. Missed TP1 here. I know because I was in front of the charts, and it kind of pissed me off a bit. So what I did when that happens and saw this candle, I moved my stops to entry, and my stops have now been hit. So yes, I banked here. That's fine, but this could now, because of these two candles here, which are pretty much, they're not trumping these two. To be fair, these two are very, very, very strong because of their context and their position. But these are a little bit scary and are likely to throw the market back in this direction. If that's the case, I'll look for a second entry, so a lower high really up here somewhere. I'll look for that on euro yen. So I've closed that one. I've got the euro, 2 euros going. I've got the Aussie yen going as well. Like I said, and those of you who weren't in the show when I was talking about this is a mistake, but a good one. When I say it's a mistake, it looks like, and I do remember placing this order, to be fair, I traded this bar here. a week or so ago. Was it a week or so ago? Monday, Tuesday, Wednesday, a week to the day, because I had an entry underneath both of these pivots. And I can't work out how this has happened, Ash. I'm going to have to go back and have a look at my account. There's no way I would have set that and left it alone unless on an EA. But I don't see how I couldn't have been in this all week without knowing, surely. And if I was that much up, I've been, 3-1 up there at one stage, I would have thought. Oh, no, not even 2-1. But I certainly would have taken profit here. But I've got no recollection of doing that. So either I've set the EA and it's done it for me, I'll have to check my account, pardon me, or I've just been in this trade wandering aimlessly around for the entire week doing nothing. I've fixed that problem, by the way. I've now taken profit and moved my stops to a safe place. I was keen to take this short actually this morning, so I'm quite pleased. It must have been, I don't know, something karma-ish going on here, because I wanted to get into this short and couldn't find a way in this morning. So if this does go, then happy days. I guess there's a certain sense of justice there for me. Ditto the Aussie. I was looking for this yesterday, you will recall. I was looking for the Aussie to get the monthly pivot, give me a reversal bar or a lower high, more particularly, and then seek to trade it. I guess I've got that on Aussie yen, but I haven't got it on the Aussie. So I saw this one as a nice opportunity if it were to set up, but it really hasn't set up on any chart, which is a bit of a bugger. Euro pound, I've been dead keen to get short in. When I woke up and saw this morning, I wasn't that impressed because it's gone there without me, of course. I don't know if I'm that convinced, though. It's gone there without me because I didn't want to get in here. So I can't be sick about it. I wanted price up here where I could find a lower high. The lower high is here. It doesn't count for me because it's a mess here. This hasn't done a uniform, nice little retracement back here, then given us the lower high. So it is a bit of a mess. And I think it's really a mess because the pound is in a mess. The market's really not sure about the pound anymore. Not that it has been terribly sure for a while, but the general consensus has been, around the traps that everyone's waiting to get long the pound. Well, this may be another opportunity because we're coming off the bottom. We're coming off the weekly pivot. I'd really like to see the daily pivot tested and then price pull back to here, give me a higher low, and that would be probably the way to go. That may well coincide with exactly what I've talked about there, but we'll see. Another one I've been looking at, but I won't say lows to get in. I think that range can go. I've been looking at trading this short, not necessarily on my behest, but because of market commentary around it. The market's very, very bearish this cross, or from last time I checked it was. And this big rally may just be the retracement that the market's been looking for. At a good spot in terms of a resistance level. So I guess anything that looks like changing direction here gets me interested, but certainly there's nothing there at the moment. On the smaller time frames, there's a definite range in here without question. And I might as well put that in so everyone can see what I'm talking about, but it should be fairly obvious. That there it sits, and we've now had a little false break. So if we've come back in here, you can imagine what I'll be looking for. I'll be looking for a lower high here to get me short. It's only a very, very narrow window of opportunity. You've got about 23 pips to play with. So there's not a lot there. It would have to be, absolutely perfect to get anything out of it. So probably not going to happen as far as I know. And really everything else, mate, I haven't had a look at, except that beautiful Kiwi yen trade this morning, which wasn't my doing, but took full advantage of it. It was very, very, very nice. that's pretty much where I'm at. Don't have any setups at the moment, and really, I'm not that interested in getting into the market, and in any way, shape, or form at the moment. I think the week's travelling along pretty cool, pretty nicely, and I don't need to do anything to spoil that at this point. What's the open done, mate?
Very interesting, mate. I'm just listening to Draghi.
Oh, he's talking now. Okay.
Yeah, let's have a quick look at the chart. Really interesting. I think what Draghi's saying. His general tone is actually fairly positive.
I thought it might be.
The first 15 minutes is always quite telling. I've just moved stops to break even on this second trade because the way I see it, if it comes down, I mean, I'll have to get another overview of what the end of the speech was. But certainly from what I've heard already, it doesn't sound too bad. And I will recap what he's saying in a moment. But this is a bit concerning. This is why I've stops to break even. Actually, just slightly better. I've just moved stops to just above. But this 15-minute bar is usually the first 15-minute bar is usually indicative of what could be happening with the market for the day. The only reason that I wouldn't be keen just to take profit here is that I didn't hear what everybody else heard if they are suggesting that Mario Draghi is saying that things are negative. To summarise of the bit that I've heard so far, and what I will do is I'll allow this to take me out down here and look for another potential trade to the upside initially anyway. But what I've just heard so far is that he recognises that there is global slowdown, and he recognises that the metrics of the China slowdown of GDP is important and there are risks, but he also cited this kind of happening in I think he listed 10 points in history where the same kind of thing happened and only 4 ended up being recessionary. And I think it was those numbers. Certainly, there was certainly a less chance of a recession just because of the particular metric we've seen with the global slowdown. So he didn't sound too concerned about the fact that we've got the global slowdown in China and that there are these other pressures going on. And he also said that
I wonder why. Sorry, I'll just interrupt you there. Is that BS, or do you think that's what he genuinely thinks? I mean, how can you ignore what's going on? In my opinion, how can you ignore what's going on in the global economy? It's a tenuous position in my opinion.
Yeah, I completely agree, and I think that in some respects, I think you kind of have hit the nail on the head because Mario Draghi's job is to make sure that ultimately the euro is favourable or out of favour, depending on where the European economy sits. Now, we know with the euro that, let's bring this up, the euro has been significantly weakened over the course of the last few days. In fact, over the course really of the last few months. This is a monthly chart here. Over the course of the last few months, the euro has significantly weakened. Now, Mario Draghi probably has a specific level that he looks for a bounce in the euro. And it's his job to do whatever is necessary, I guess, to make sure that the euro doesn't devalue too significantly and doesn't overvalue too significantly. So if he suspects that that the euro would devalue, then he could just say something which could start to promote the euro, and that's why I'm a little bit skeptical about some of the things that some of these guys say, because we know what their job is. We know what their role is really out there, and their role, as I say, is to make sure that their particular currency is doing what they need it to do. So it could well be that that he has written a speech which would manipulate the sentiment in the market to be a bit more positive than it would be negative. I mean, he effectively used different metrics to to make his argument for the markets not being too much of a worry. Now you could say that you could fundamentally argue that anything is positive or negative, depending on what metric you use. You could say that that the pound is positive because of let's say wage inflation, because there's going to be something out there which is positive, and he kind of cites the service sector as a barometer for global growth, and says that it's the most susceptible and would be a good metric to use. But I've never really heard him say anything about the service sector before, so I'm not sure whether I would completely believe or trust what he's saying. But it did sound to me like this could well be a potential way to manipulate the market in the way that he would like. So we have seen some weakness in the FTSE, and the weakness hasn't gone through our level here. This is our hourly chart, and the hourly chart would have to break down this trend line. So that stop should be just about safe. Obviously, we could get a pop and a pop back to the upside, and I'm going to have to accept that if that was to be the case, because what I don't want is for it to pop and then go down and me be waiting in another long here. So I want to just see whether this trend line is to hold, and if it does hold, then I'm going to leave it on to target and maybe beyond, because what that would suggest is that the one big announcement of the day, which he's still talking, the one big announcement of the day has not been seen as negative. So if that's the case, then it may be that we end up with a positive day. I'm not saying how positive, but it could end up being quite a positive day. If the big driver of the day doesn't suggest downside, then it probably would suggest upside. Obviously, it could be sideways, which is why I use the word probably, but it would probably suggest some upside. So if this area holds, then I'm going to hang on, and I may well wait beyond the weekly pivot, but I will use the technicals to decide that for me. Doesn't seem like he's going to be raising interest rates anytime soon, which is surprising to see the euro go in the direction that it's going. But he also had a little bit of forward guidance announcements going on as well, and effectively he is suggesting that in the medium term the global economy actually isn't too bad, and if it can get through its current phase, then there's no reason that we wouldn't see some investment coming back into play. He doesn't see that the investment, the lack of investment in business has dropped off significantly enough to suggest recession, which is another aspect of what he's talking about. So he's fairly positive in the speech. He's certainly giving it a fairly positive tone. We know the numbers aren't great, but people trust Mario Draghi. They do tend to kind of move the market on his words, and that appears to me that's what's happening right now. So nothing would suggest at this stage that the euro would weaken from what he's saying.
Okay, fair enough. Then we could probably also consider out of that if he's got a neutral statement, or if it is hawkish, then maybe the euro rallies. But if he's not hawkish and more neutral, then I see no reason why it can't continue to fall. That's, of course, something which we'll find out in the not too distant future. I've got this chart up because Christo was asking, I think it was earlier in the week, or maybe it may have even been last week, I can't remember, what I thought of Aussie Kiwi. Christo, I hope that you got out of this before that news event, mate, because that doesn't look too pretty if you're short Aussie Kiwi, I'd have to say. It looks pretty cool if you're long, though. I'd also have to add that. Mate, I've got to rack off in about 7 minutes or so. So if you don't mind, just preempt some 30-minute charts.
Yeah.
And what I might do, if anything, I'll talk as though I'm not in any of these trades. I think it's probably a good idea. The Aussie yen in particular, because it's not on this account anyway. So we'll look at this as though it's it's absolutely neutral ground. Look, a few things here. That there is a signal that there's an acceleration level through here to this direction. That hasn't happened in any way, shape, or form. So again, going back to the cause and effect, if it hasn't happened, why hasn't it happened? And if it hasn't happened, then do we start thinking, okay, opposite direction may be the way to go? Look, I'm not convinced of that. Really, what's happened here is the market has fallen a significant amount, and we've really come back to where it broke out before, to this exact level. Ash talks about this all the time, where the retracement comes back to where the breakout was, and that's exactly what's happened here. So I'm not sure right now which way this is going to go at all. So all I can do is put in some lines and hope they tell me something. This one's now non-event, so all I see is support here. Best direction to take off support is always going to be north, but yeah, I don't see anything here that suits me until we break through here, hit the weekly pivot, find support, get back above the trend line, retest it, then look for a long. So what I'm saying is the retracement on this move for me isn't quite deep enough at this point. I think the retracement belongs here. But again, going back to what Ash believes, if it retests where it broke out, that's where it's likely to go again. So I think either one is perfectly valid, and I'll be looking for that. I'll call it the safer way to look for that false break. If it doesn't happen, of course, this could continue to drive down, no question about that. And the fact that I'm actually trading it short, probably I'd like that to happen. But I can definitely see the opportunity for this to go long, no question. Euro we've spoken enough about. I don't think there's anything I need to do here. I've got my stops where I think they need to be, so I'm good to go with that. In terms of 30-minute chart right now, well, we're seeing a news event, guys. This is exactly what happens during a news event. We're up and down, especially if it is a speech. And where this ends will probably be in terms of relative to where price was before it started. Wherever this ends up is probably where we're going to see a direction today on the euro, in my opinion. So if we're closing up here, then I think there's upside. If we're closing down here, then I think there's downside. So that's how I would gauge it. Aussie, look, there's a case here for this trade line or trend line to be tested. I'd have to be agreeing with that. 4-hour chart's probably not going to be any good to us because you're too close to it, and the risk that you would have to take to get into it would be too great. 30-minute chart, however, is a different kettle of fish, kind of. And the reason I say kind of is we've gone too far today already. This cross has traveled 55 pips. In context, that's not too far, but it's kind of bordering on it. You have to look at the average daily range of this cross. But the issue for me is that we are bordering on an area that I don't trade, and I don't trade short at DS2. So I'd be looking for nothing. I don't want to trade this at all at this point. So I'll leave it alone. Euro yen, if you're not in euro yen, short as I was earlier today, yeah, look, it's in the middle of nowhere as well. And Draghi speaking at the moment. Again, I say this candle will probably give us the direction of this cross for the day. I'm out of this trade that we entered here earlier on the daily chart. I think it was the daily chart. No, it was the 4-hour chart. That's right. And if you're in the show this morning and want to take this trade with me, look, if you're still in, I've got no problem with that. This could go either way is what I'm saying. It's a 50-50 call from here. and I'd rather be out than in. So we're at TP1. I've moved my stops to entry, got taken out, so I'm happy with that. I don't know at this point what the euro is going to do until Draghi finishes his talk. Euro pounds, again, really keen to get back into this short, but it's not giving me any opportunity that I want to see. That may be a good thing, because it may be false shorts coming up, like false breaks that we've seen here before. If this double bottom gets taken out, then I think you can safely say that the euro pound is in trouble. But there's nothing for me to do. Euro yen is a possibility here today, but it's going very quickly. This is a good one. What we'd like to see now is price get back to here in, like, an hour, 2 hours, 3 hours, something like that, and give us a lower high. That would be a short for me, but nothing just yet. Cable, those two candles there are absolutely telling me that I don't need to be in the market right now. Why? Well, we've come long off the weekly pivot, short off the daily pivot, and that's just giving me the heebie-jeebies. Which way do you go? Breakout either way, maybe, but it's a maybe, not a good probability, that's for sure.
There's a little Brexit update actually, mate, as well.
Is there, mate?
I don't know if you.
I don't have any trade to take, so I might as well just give it back to you and leave it at that, pretty much.
Okay, no problem. What's going to happen? Are you just going to leave this running and then because I don't think I can stop it, can I? If you go, you can be able to stop it in half an hour.
I can come back probably in an hour or so.
Okay. Okay. All right. Let's do that, because otherwise, because I'm not sure I'm going to start. I can't find the studio creator. Did you find it?
No.
Okay. How did you get in then?
Well, I leave it open. I just leave it on my taskbar. So then you've just got to go in and create a new event on the right-hand side.
Okay, I need to figure out how I'm going to do that. Okay, so the situation with Brexit, I mean, have a think about what you want to do about the show from here, and I can give a quick update. It's up to the guys, I guess. The situation on Brexit is, if everybody remembers the name Jacob Rees-Mogg, we were talking about him in Bali, and he's a very prominent Brexiteer. He's the leader of the ERC, ERG, which is the European Research Group, and they are some of the people that have really forced the Prime Minister's deal to be voted down. I mean, there's obviously Remainers, but she needed some Brexiteers, or that deal needed Brexiteers to also vote it down. And the ERG are, some of those prominent people that have been a factor in her not being able to get her Brexit deal through. But Jacob Rees-Mogg, the most prominent of those, as the leader of that group, has come out and said that he would hold his nose and be prepared to vote for the Prime Minister's deal, because he's now concerned that the lack of a Brexit would be worse than not having a Brexit at all. So it seems like there are some supporters now coming in for the PM, and that may push it through. So we'll have to see whether that does strengthen the pound. But what that does mean is that the pound itself would unlikely do a whole bunch today. Now we're going to have a quick look at it. Now the FTSE 100 is a little bit tenuous. I've moved stops to break even. There's a little pivot down here as well, which it's just bounced off. And I suspect if the pivot gives way, then the pivot and the trend line giving way would be quite significant, and we'll probably see this move to the downside, and then we can either look for another upside entry, or we can just stay out the market until the picture becomes a little bit clearer. Now, if I'm going to go down and check out what my charts are telling me, I have to go from really the lowest end now. Where I was looking before at the weekly and the daily, the weekly and the monthly, The weekly and the monthly certainly suggest that we are likely to get some weakness, but obviously the month has got another 3 or 4 days, as has the week got another couple of days. So it's possible that we get a day at least in between, maybe a day by Thursday or Friday of downside. It's possible that we could get a day of upside. And the Mario Draghi speech is an obvious driver today. Now, he didn't say anything that would suggest that there was bearish price action, which could become fairly significant. What he did say was that there was a global slowdown, but the softening that he sees, he doesn't see it being that significant, and he doesn't see the fact that the business if the business part of the market could not handle a little bit of softening. So he's not really sounding the alarm bells. Now there's a little trend line along here as well that I've just seen. Now let's just have a quick look at that, because that is a little pattern that we should have a look at a measured move on. Yeah, you see the measured move does take us up to the 71.70 level. So I'm still going to use this as my target. I'm still going to use the 71.70 area. So we're looking for around about 45 pips-ish to this particular point. But it's got to stabilize here. So let's have a look at the likelihood of that happening. And I have to go down to the shorter term time frames. The 15-minute chart to start with does not look particularly healthy. The market has inevitably stopped on this area. It's inevitably stopped in this area. Now, the reason that I'll probably, yeah, it looks like the trend line's along there. So nice 3 touches there. Nice 3 touches along here as well. We're just about on our 4th touch. So there's an inevitable area for the market to get caught here. So actually, if anybody's looking to scalp out a little bit, this isn't a bad entry point with what could well be a 2-to-1 trade if you get under this particular area. Because if this is to break down, my suggestion would be to take a buying opportunity here, and if it breaks down, just close your position. You know, don't even let it come to the stop. I'd be going long here, stop under this particular point, so around about 20 pips stop. But if the market does break and close down here in the next 15 minutes, then I'll probably use something like a 10-point break, and let the bar close, and then just close the trade altogether. Because if this is going to go, then that would create a potential 4-to-1. So actually, a pretty good trade. All in all, this could potentially create at this particular area here. And when we look at the 5-minute chart, we do see that with this particular bar here, there's a little train tracks reversal kind of bar here. This bar could be significant, but it won't be significant if it just pauses here. It'll only be significant if it takes out this low. So there is some evidence that there are buyers here. It's all dependent. The big aspect of this is, are the buyers strong enough to overwhelm the sellers in this particular area? So we know that is a little bit unclear. I think this stops in the right place. As I say, if it jerks down and jerks back up, I'll allow it to stop me out and possibly get a re-entry, which shouldn't cost too many pips, maybe 10 or so pips, and I'll again look for some upside. So I'm okay with how the market is looking. I think when we think about the fundamentals, the one fundamental aspect of the market today is Mario Draghi. And yes, Christo. He is for no deal, but what he is concerned with is that the chance that Brexit could be revoked altogether, with I think it's now 6 million signatures, so 6 million signatories on the revoke Article 50. He's concerned that would that could potentially, you know, stop Brexit altogether, and he wouldn't get the desired effect from allowing time to run out and not voting for Theresa May's deal. So I think the panic for Jacob Rees-Mogg is fairly palpable, and it's got to the point that he would hold his nose. As I say, he's happy to hold his nose and vote for Theresa May's deal. So that may well happen. We might see that that he would change tack on that. and that could potentially strengthen the pound. If we're starting to see Theresa May's deal again, back in focus, it could potentially strengthen the pound. So let's have a quick look at how the pound looks. Now this bar is just about to close up. Actually, so I've got a few more seconds. Interesting second bar here. So the first bar is of interest, but this second bar is very interesting, and it's going to be really interesting now because the bulls may have gone a shade early. They've got around about 30 seconds now to hold on to this bar. So if this bar starts to crash to the downside, then that would suggest that the bears are still in control of this market. Now this is only a 5-minute bar. So with the 5-minute bars, we're not going to put too much weight on that, but it would suggest that the bulls are going to have to battle again if they're going to effectively win this area over. So let's just see what happens. Well, what's here we go, three seconds to go. Now that's quite telling. You see how it jumped up towards the end there? That's very telling. Now that doesn't necessarily mean that that this is going to go up, but what it does mean is that I'm not going to have my stop at this particular point anymore. So I'm going to cancel the stop loss because I quite like this bar. What I don't want is some further fluctuations getting me out of the market and then shooting in the opposite direction. So I'm happy to let the market tell me what's going to happen. So I'm taking those stops out. Now the reason for that is that I have a what would be a train tracks reversal, if you like. I mean, if there's a 2-bar pattern here, which I'll talk about in 1 second. But any of you that have done the daily wave rider, which should have been all of you, unless there are other people that aren't part of Actions to Wealth listening, will know that these 2 bars together create the same as this bar here. Now this is called a hammer. I know you guys call it a low test bar, but the classic name is a hammer, and the hammer's role is to hammer out a low. And the idea of the hammer is that this becomes the lowest particular point. So stops are now going to be placed under this particular bar here, with buy stop orders just above it. So as soon as the see now it's breaking to the upside. Now that should cause a surge to positive territory. Now, what was quite significant about this bar, there's 2 things that are significant about this bar. Firstly, that it already follows a fairly strong signal with this bar. Secondly, that it has got it's created the area which is the low of this particular candle bar cluster. So it's hit the low. So now that does act as a classic hammer because it's hammering out the low. And thirdly, because when it was 3 seconds to go, it jumps to the upside. So that is really showing us that at least on the short term, now we're only looking at 5-minute bars here, but at least on the short term, the bulls are quite, what's the word? The bulls are quite motivated. There are bulls that are motivated down here. So the bears now, the other significant fact is that if the bears manage to get below this area, then it could cascade quite significantly lower. So both areas become quite telling. The bulls will take charge when it gets probably 5 pips above, maybe 3 pips above. It's usually a certain percentage. So the whole bar is around about 80, yeah, 8 pips, so maybe a couple of pips above. So if it gets to this particular area, then we'll probably start to see this really take off. If it starts to close below that particular area, then we'll probably see it start to drift significantly to the downside. So I'm going to be just a little bit on my toes with this next area of price action here, but nothing concerning as yet. Now let's have a look at the pound. That's a really good question, Christo. Really good question. And the answer to that is that her significant change may be something as simple as an extension. It might be that the EU are happy to offer her an extension, which she's got. She has actually managed to renegotiate the extension since the last vote. So it could be something as simple as that. That we may not see we may not see the details of the deal in itself changing too significantly, but as I say, because she's got the extension, that may well help her out. But I don't know. You know, the speaker, the speaker could actually come back and say that that he's not too keen on the fact that it hasn't still, it still hasn't changed significantly. But I don't think he would do that. I think that she would probably, if she's likely to get it through, I think he would probably turn a blind eye. Not to say that the speaker wants Brexit, but he is meant to be impartial. And I think if there's an attitude in Parliament for her deal to be passed, then I think she'll probably be much more likely to get it through. Now, Jeff was talking about the pound being fluctuating between these two levels. Now, I've got to watch out because the next thing that's likely to happen today are the votes, and that could affect the FTSE. So we've had the first fundamental announcement of the day with Mario Draghi, and I did say that was the only one, but actually it's not the only one. There are Brexit votes today which could actually fluctuate the FTSE 100 and the pound. But what is unlikely is that we see anything significant with the pound until that particular vote. Now, what does that mean? Well, that means that it probably won't crash beneath this level here, and it probably won't get above this level here. So I suspect if there are range traders out there, it could be a good period for a range trader until the vote is going to happen. Now we'll have to look at when that vote is, and I will check that out in a second. But it looks to me that anything that drops down to these lows would probably be bought up, and anything that came to these highs would probably be sold off before that vote was to happen. So we are really in a potential sideways market, which as long as we know what we've got, as long as we know what we're dealing with, it gives trading opportunities. We're not going to be. It's unlikely, I should say, that we are going to be dealing with trend per se. You could certainly argue that there is a downward trend within the range, and we do have to be aware that every range has a trend and every trend has a range. So if this is a range, that means that the 15-minute bar causes, the 15-minute time frame causes a trend. So you look for a longer term time frame for a range and a shorter term time frame for a trend. So at this particular stage, you're looking for the long in the pound. But given what we've got, I think it's probably maybe a little bit safer just to let it come down. If it hits an extreme, then look to be buying it up. I think it could be fairly volatile today, and maybe not too nice to trade. So you're going to have to get the extremes. Right, now let's have a look at when the vote is due and see how that could affect us today. Now, Theresa May will probably. It will probably cost her job if she is to get her vote through. So let's have a look. Now it's PMQs today, but that doesn't necessarily mean that there are votes, but I just have a funny feeling that there are, but it doesn't look like. Now when we look at this doesn't suggest that there are votes. We've had this, and that has caused the euro to rally, and I'll have a look at the euro in a second. The FTSE hasn't really gone too far. It doesn't look like there's anything else there. So with nothing else at that point, let me just see. Real estate is underperforming today. Let's have a look. Let's have a look. Right, MPs prepare for votes in bid to break deadlock. Let's have a look. MPs are preparing to vote to their preferred Brexit option with the PM due to meet Tory backbench in an effort to win them over to her deal. Some have suggested Theresa May must name the date she will step down to have any hope of winning MP's approval for her deal at the third attempt. Leading Brexiteer Jacob Rees-Mogg has hinted he may soon back the plan. Having voted to seize control of the Commons business, backbench MPs will vote on Brexit alternatives later. Now, there are a few different connotations with that. I still think the Norway Plus option will probably get most of the support. Whether it actually gets put to to Parliament and whether it then gets taken to the EU is another question. I don't know about that, but the Norway Plus deal seems to be fairly popular within Parliament. So. And the Norway Plus deal is effectively staying in the European trade area, but without a seat around the main table. I'm not sure about the customs union, but there's so many different aspects to the European arrangement and the European relationship that I get a little bit lost in the technicalities of it, but we can have a look at that if it becomes important. So the Speaker will select around half a dozen options likely to range from cancelling Brexit to leaving the EU without a deal, with MPs marking on paper each option with a yes or a no. The process is likely to continue into next week. However, it is unclear whether MPs will be free to vote as they wish or will take orders from party leaders, whether they're going to be whipped or not. That means. Former Health Minister Steve Bryan, who resigned on Monday to back the move to force indicative votes, told the BBC Newsnight more than a dozen others might quit the government roles if they are denied a free vote. MPs should be free to vote as they see fit, he said. This is bigger than all of us, bigger than the parties. It's country first. The PM's next move, Mrs May tries to win MPs round to her deal, which has been heavily rejected twice. She is expected to address the backbench 1922 committee ahead of Wednesday's debate. The PM has signalled she will try to bring her deal back to the Commons for a further vote later this week, but only if she believes she can win. And that's probably tomorrow. There's not too much, but ex-Foreign Secretary Boris Johnson told the BBC there was no point supporting Ms May's deal, without any sign the UK is going to change its approach in phase 2, meaning we will vote for you, but you have to step down so somebody else can negotiate from here on in. Otherwise, he feared the country would be indefinitely tied to the EU's rules. So, so here we have the options. Here we have the options, okay? Customs union. This calls for the UK to negotiate a customs union with the EU immediately after it leaves. Common Market 2.0. So the UK would remain in the single market by rejoining the European Free Trade Association, EFTA, and staying in the European Economic Area. A comprehensive customs partnership would replace the Irish border backstop plan. It would accept continued freedom of movement, but with conditions. So that's effectively the Norway Plus deal. EFTA and EEA, the UK, would rejoin EFTA and sign up to existing EEA rules and obligations, but make them enforceable through the UK courts. Rejects any customs union with the EU, and now this is where it gets a little confusing. Part of the free trade deal, part of the economic area, but not the customs union. Malthouse Compromise, I'll have to look into that. Malthouse Compromise Plan A, Mrs May's withdrawal deal, but without the backstop, which would be replaced by alternative arrangements. Nah, that's not going to happen. Another referendum, the public would vote in a confirmatory referendum on any Brexit deal which is passed by Parliament before it is ratified. I don't see that happening either, the longer this goes on. And then revoke Article 50. If the government has not passed its withdrawal deal, MPs would vote on a no-deal Brexit 2 days before the UK leaving date. If MPs rejected no deal, the Prime Minister would have to cancel Brexit altogether. So there's a few different connotations, and we need to figure out what the difference between the customs union and EFTA are. But so far, it suggests that the the Norway Plus option seems pretty favorable. So now, without not the most significant thing for us is how does that affect the pound? And it just seems that the pound is probably going to be back and forth all day. You know, there is a little uptrend here on the 15-minute chart. So I guess you could be looking at some pound upside within the range. Let me just double check what the other charts suggest. The 4-hour is not looking too hot. The hourly is the key here, I think. This is the 15-minute chart. The hourly, well, I suppose so. Here's another hammer. Look at that one. Now, I don't know how this one would have ended up. This one's a lot more significant because it's an hourly hammer rather than a 5-minute hammer. But the fact that we've got that hammer does suggest that there is some upside coming. It has no predictive qualities of how far, but there is some upside coming according to this particular bar here. But I don't know. Not sure if I want to get caught into the pound today. It's 50 pips to the upside and potentially 50 pips to the downside. So you're looking at 1-to-1 and a pretty uncertain looking market there. Right, now the FTSE's development has not been too swift or significant as yet. We're still messing about in this area. Now the 5-minute chart did produce a little bit of upside. Now we have to recognize that that doesn't mean that the hammer has failed just because it pushed back down. All this hammer tells us is that for the next 5-minute period or a couple of 5-minute periods, there's likely to be a push up. You know, for the next period, there's likely to be a push up. Now that doesn't mean that it can't be a push up and get swallowed all the way back down again, which is kind of what's happened here. So what we would do after seeing this bar and this bar is start to see subsequent bars, and then we'd start to shift time frame. So we look at the 15. The 15 is an indecisive kind of spinning top bar with bullish connotations because of the body. That's the way that I would read that particular bar. Looks like a fairly decent hold. Move to the downside, move to the upside. A break and a hold above this point will lead to some further upside. A break and a hold beneath this point will lead to some further downside. So we are caught in a little bit of no man's land here. Still, the upside is more preferable because the risk to reward ratio is far better to the upside than it is to the downside. So if you're thinking about trading statistically, then you'd trade this one long rather than short. And if votes are going on all week, that doesn't suggest that Brexit or the pound or the votes are likely to move this today. So I still think that we're probably trading off Mario Draghi's speech. And from what I heard, I just didn't think it was too negative. Now we're about to get an hourly close. Now this isn't a particularly good looking bar. In fact, it's an awful bar. We've got 3 minutes before it closes, so let's see what eventually happens. But it's a terrible bar. It's an evening star. In fact, it's a tower top more than an evening star because you've got two small bodies here. A very a bar that's really been dwarfed by this one. So this one's much bigger than the bullish bar going up. It's really taken out by the looks of things. 1, 2. Almost 3. No, not really 3, but let's see where it ends up. If it ends up at the lows, it's going to have taken out the range of this one, the body and the range of that one, the body range of that one, with 2 weakening bars at the top. Not particularly bullish or confidence setting. However, not closing below an area, namely the trend line area here, and what is a daily pivot, wouldn't actually be too problematic, because what could happen is that the bears may well clear out, and then the bulls might start to kick back in again. So not a great bar, but because of where it currently sits, not all that concerning. So let's see if it closes under this level. Now, if it does, I will take this trade off manually. But I wanted to kind of give it enough room to not not have the stops do something annoying, because it looks a little bit jerky down here. So I'd like to give this another minute, see where the price action ends up. If it ends up below this area, I'll take the trade off. If it ends up holding, I will leave things to develop a little further and see if I can get any more clarity from the charts. So we have around about 30 seconds to go. Now there we go. It's just edging lower now. A close beneath this this point here will be problematic. But this is what I don't want to do. You see, what I don't want is for the market to jerk down here, then pop back up again, and then find that it rallies from that point. So I'm quite happy just to let it run. Now closing beneath that area is not particularly good. I don't love that. I don't love that. So I am going to close that down. And I'm going to close this down. Could still rally here, but I don't like the fact that it's taken out lines and levels. It hasn't taken it out significantly, and this just could be a bit of a this could just be a bit of a, you know, messing around with the market. But I don't particularly like that. It didn't close below that point, but it was close enough. Now, one thing about this is that if markets end up going in the direction that you thought in the first place, that's absolutely fine. You know, because really, when you think about it, the chances of an area breaking and keeping on going are much higher than the chances of an area breaking and then switching around. It does happen, but I don't trade false breakouts. You know, I'm much more interested in allowing some more clarity. So this may look, if this pops up, like a lost opportunity, but it might not be that. All that might happen is that we might need to take out this area, then retest it, find a new higher low, and then trade it from that point. So this is really going to be about confidence now. I don't really want to be kind of stressing about this this market. So the market will provide some clarity in time. Oh, the only thing is, actually, nah, that's okay. It's okay. I think the only problem with this actually is it didn't close beneath the daily pivot, but that is the way it is. So I'm going to wait for this now to break. I still want upside. I still don't see the Mario Draghi speech being problematic. So I'm still looking for upside. So I'd like to see a break above here and then see if I can grab something. Now, if this does break down, that's likely to change my my opinion somewhat. In as much that I'm going to need to see the story unfold a bit further. Yeah. Anyway, that's it for the day. As I say, I think much better to get yourself some clarity than stay in markets which just look a little bit tenuous. There will be some clarity, and the other thing is that this is a long up here anyway. So whatever happens here, we have got a long in the market. I'm really looking for a short ultimately, but probably around about this area. Okay, I am going to push off, guys. I'll be back tomorrow. Same trade time, same trade channel. Enjoy your afternoon. And Jeff will be coming in to turn this this off in around about half an hour. So have a good one, guys. Still looking for FTSE longs, but let's just get a little bit more clarity. All right, safe trading, guys.